All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Inner Circle Live pre-New York session. I'm your host, Ryan Carthage. We'll be joined shortly by my awesome partner, Mr. Benny Allen. Hope everybody's doing well today. On this beautiful Tuesday, as always, let's turn off all distractions, grab a pen and paper, let's take lots of notes, and let's make sure that we participate and engage. And as always, we want to start our day off by taking massive action. That action stands for accepting all possible losses before entering a trade, preparing you for any outcome, setting yourself, body, mind, and spirit, ensuring a balanced approach to trading, trusting your education, strategy, trade skills, and intuition. Imagine your trade success and materializing, obeying your trading strategy, avoiding decisions based on greed or fear, and never looking back or stopping once your trade has commenced. All right. So, if everybody can hear me okay, drop me one in the chat and we will get things underway. All right, cool deal. Give me 1 second here, everybody. Just trying to get one thing updated here. All right. All right. So let's hop over to trading economics. We will get things underway. All right. So we have out of the Eurozone, European stocks traded higher on Tuesday, with the stocks 50 rising about 0.5%. Um, Stock 600 up 0.3%, rebounding from losses in the previous session as investors' focus shifts to corporate earnings. Now, Phillips led the gains, jumping around 10% after raising its full year guidance. Shares of EssilorLuxottica also climbed 5% after the company reported a rise in first half operating profit, despite facing tariff headwinds. AstraZeneca at 0.6% following its earnings released, and Barclays posted a better than expected profit and announced a 1 billion euro share buyback. Um, but its shares edged to 0.2% lower. L'Oreal hovered near flat ahead of its company's quarterly results due later today. Meanwhile, the auto sector was mixed, with traders continuing to assess the EU-US trade deal reached over the weekend. Mercedes-Benz and BMW both were up nearly 0.3%, while VW declined 0.7%. Stellantis sank 2.9% after reporting first half net loss of 2.3 billion. So this trade deal, um, a lot of people out of Europe see this trade deal as bad for the automotive sector because of the size of the tariffs. Tariffs 15%. Um, so there's some people that aren't happy with this trade deal. So we'll see how things continue to trend and see what that overall impact on the economy is. But we'll keep that in the back of our mind that some folks don't, that trade deal isn't sitting well with them because of the impact it could have on the automotive industry. Okay. Um, so that's that. Gold uh, edged up to around 33.20 per ounce on Tuesday, but remained near 3-week lows. Signs of easing trade tensions and stronger U.S. dollar diminished the metal's appeal. Investors are now closely monitor ongoing talks between U.S. and China amid expectations of a 90-day extension. to the August 12th pause deadline. Um, Today's their second day of talks, right? But this comes during a pivotal week where President Trump trade agenda with separate deadlines looming this Friday for other countries to clinch a deal. Following an agreement announced with the EU on Sunday, includes a 15% tariff on most European goods. Talks are still underway with other major trade partners, including Canada, South Korea. Meanwhile, the Federal Reserve is scheduled to meet this week. Widely expected to keep rates unchanged, although markets continue to price in a potential rate cut in September. With the pressure on Jerome Powell, it'd be interesting to see how that goes. Um, Investors also await a flurry of U.S. economic data this week, including PCE, non-farm payroll results, right? So we got a busy week. So with that, we got a busy week of data ahead, and we'll take a look at that when we get to the calendar. But um, tons happening, including that rate statement for the Fed. Brent crude oil futures rose around $70 a barrel, or 70.3 on Tuesday, building on Monday's gains of more than 2% amid concerns about tighter global oil supplies after Trump shortened the deadline for Russia to reach Ukraine peace deal. Trump said on Monday that Russia has about 10 or 12 days to agree on a ceasefire or face potential secondary sanctions. um, Slashing the 50-day deadline he gave earlier this month. This follows a new EU sanctions package on Moscow, which includes lower price cap on Russian oil, additional additional banking restrictions, and a ban on large Indian oil refinery. Um, Further supporting prices, the U.S. and EU agreed on Sunday to a broad brush trade deal that sets a 15% tariff on most European goods. This comes after recent trade deals, including one with Japan, alleviating fears that tariffs could hurt global economic growth and energy demand. Investors now monitor ongoing U.S.-China talks with the expectation of a 90-day pause. All right. Um, bu- 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 right, just looking at the dollar overall. Uh, the euro slipped to 116, extending Monday's 1.3% decline, sharpest one-day drop in over 2 months, um, and hitting its weakest level since June 20th. The move reflected growing investor concern that the newly announced trade deal with the U.S. and Europe uh, disproportionately benefits the U.S., offering little to improve the Eurozone's economic outlook. Right? Um, the agreement has drawn a strong criticism from France, while others, including German Chancellor Merz, have emphasized the potential negative impact on European exports, by extension, economic growth. Meanwhile, market participants turned their attention to Federal Reserve policy on Wednesday ahead of President Trump's August 1st deadline for tariffs. In Europe, rate cut expectations also shifted, with marks postponed, likely of a 25 base point cut in March of 2026, and pricing in a 90% chance by then. For December, possibility of another cut has fallen to 70%. So, yeah, I, Um, so that's where we are there out of the Eurozone. Other market I want to look at. Mm-mm-mm. Dollar yen. All right. The Japanese yen hovered around 148.3 per dollar on Tuesday, holding near 1 week lows after a sharp 3 day decline, pressured by broad dollar strength. The greenback remains supported as recent global trade agreements seen as disproportionately benefiting U.S. economy. Donald Trump also reiterated on Monday that countries unwilling to negotiate separate trade deals could soon see tariffs of 15 to 20%. It's down from its 30% initially, significantly above the current 10% headline rate imposed in April. On the domestic front, the Bank of Japan is set to announce its latest policy decision this week, while rates are widely expected to remain unchanged amid ongoing tariff-related uncertainties. The central bank is likely to revise its inflation forecast upward um, in its quarterly outlook. Right, political tension continued to simmer with growing calls for Prime Minister Ishbia's resignation. Ishbia, however, reaffirms his intention to remain in office. Right. Um, the way it sounds is it's likely to hold that way um, until the end of the month. Now that we're through the trade deal that's been secured, want to make sure all the details and all the fine print is the ink is dried on those, and it's likely that Ishbia will resign in the near future. So keep my eyes on that from Japan to see how that changes things overall um, for the yen. Okay. Um, and then on the indices side, U.S. stock futures held steady on Tuesday following mixed performance on Wall Street to start the week. On Monday, the S&P and the Nasdaq Composite edged up 0.2% and 0.33% respectively, with both indices notching fresh record highs. In contrast, the Dow slid 0.14%. The market reacts to the EU-US trade agreement and braced for a busy week packed with corporate earnings and key economic events. President Trump announced a trade deal with the EU, set a baseline of 15%, while optimism grew around the possible extension of the U.S. China truce. Investors look ahead to earnings in major tech names, including Meta, Microsoft, Apple, Amazon. Meanwhile, in terms of Federal Reserve policy, on Wednesday, traders will be watching for signals of a possible rate cut in September. Key economic data, PCE, inflation, jobs reports also due this week. All right. So that's where we are overall across the board. And then over to the calendar, right? We have a busy week this week. Okay. Today we got Joe's job openings and we got CPI data out of Australia. And then tomorrow things really kick off. Okay, we got ADP non-farm employment change. You got GDP quarter over quarter. You got Bank of Canada rate statement in the morning. You have the press conference at 10:30. You got crude oil inventories. You got Federal Reserve rate statement at 2 o'clock. That press conference at 2:30. Then you have retail sales for Japan, retail sales for the Aussie, China manufacturing PMI, and then Bank of Japan rate statement Wednesday night, right? So you got three rate statements the same day on Wednesday, all right? So we'll keep our eyes peeled there. Oh, also out of Japan, you got business owners kind of pressing the BOJ on rates. Um, they desire a rate cut to happen. I mean, a rate hike to happen sooner rather than later. But with them potentially raising their inflation projections, we I'm still looking at Q4 for a potential rate hike, potentially even pushing that into Q1 of 2026. So keep that also in mind for the Bank of Japan. Um, and then so into Thursday, we have PCE data for the United States, employment cost index, unemployment claims, and then on Friday we got our non-farm payroll batch of reports. We also have ISM manufacturing for the United States as well, right? So Wednesday, Thursday, and Friday, busy, busy, busy weeks. All right. So, Benny, good morning, bro.
Good morning, Ryan. Good morning, everybody. How are you, Ryan?
I'm doing well, bro. How about yourself, man?
Oh man, doing pretty good.
Awesome, awesome. What's top of mind for you from a fundamental perspective, bro?
Oh man, you know what it is. Just waiting on this Fed decision. Uh, and then and the four guys that comes. I think they hold one more time. Uh, before they cut. So
You
interesting.
see that cut in September too, huh?
What'd you say?
I said you see it's cut coming in September too, huh?
Yep, yep. I think we still also get two rate cuts this year, but I think they hold. Uh, I just think that people. I see a lot of debate going back and forth on whether they should cut now or not. But the impact, if any type of policy, whether it be monetary or fiscal policy, it it's a lagging effect, right?
Hmm.
And I think he's right to be cautious, especially because of the tariff policy and everything that's happened since this administration has come into office. I think it's hey, we were projected for four cuts, and then the tariff situation came about. So
Right,
it's like, the president is upset about something that he really did to himself.
right.
So I think you have to wait. You don't want it to be another 1970 situation again where you cut too fast and then inflation explodes. And I think every Fed chair, you know, has in the back of their mind, what happened in the 1970s and not wanting that to happen. So to be to be a little bit cautious is just a normal part of their playbook. No, it's especially when you can afford to hold them right now, to see what happens. Give it a little bit more time to see if it's definitely the right time to cut. So I think they hold. It'd be interesting to see what the forward guidance is tomorrow and see if there's any change in his rhetoric or tone, and we'll see from there. But I know that's what the market's waiting on, so we'll see.
Yes, sir. Yes, sir. That's exactly what they're waiting on. Exactly what they're waiting on. Cool deal, bro. Appreciate you, man. Team, do you guys have anything to bring to the table from a fundamental perspective before we dive into some charts? All right. All right. Cool deal. Um, ba- ba- DXY indecision right now, but right, we've been pushing to the upside. Okay, been heading long, so we'll see. Right, as we sit at this daily resistance level here, we'll see how price fares and how things move as we go forward here. Make sure it's the right one. See if we're able to break above this new high here. Um, mm, mm, mm. We did have to shift back to this US dollar DXY chart. The things that are happening with smart traders. So just be aware of that. The scale is different here. Um, so keep that in mind. But pushing to the upside, right? last 3 sessions. Indecision as we currently stand. Down to the 4. All right, I'm gonna run this fib off the low just to check this look here. So we already got to that D extension. We had a 786 retracement here. That D extension was achieved, so waiting on the swing high to form there. So this could potentially give us a double top and a move back down. So I'm interested to see how this moves here. Okay. Um, Potential double top here on the 4 with fresh AB boundary coming back down to the downside. We do have that stochastic in the sell zone there. So let's watch for that. Stochastic in the buy zone on the daily. So let's keep our eyes on this DXY to see how price moves with the Fed decision. And with the rest of the day that comes out this week, right? Looking for this move back down to the downside here. We'll get a fresh AB boundary at some point, right? Could look like that and potentially could push higher, but we can see if we get that move down to stay inside this resistance level and potentially come back down to the lows, 16,610. I'm sorry, 12,610. Okay, so that's the DXY. Any questions here? Some story there. Oh, okay. Oh, down on the 1, you got an 80-20 price push to the downside there. All right, that's a sub fib off the low. Fib off the low, 80-20 there. Looking for that retracement. All right, so look for that swing high to form on the daily. And then look for that move back down to the downside. Okay. All right, so we'll get caught up kind of across the board on things. S&P 500 slowly inching to the upside still, right? We're still tracking the $6,500 level. We broke 6,400 yesterday. We're slowly getting there. We do have a stochastic that's overbought, right? Benny's been talking about seasonality and how that comes into play and what that looks like, right? So generally going into the fall, we see retracements occur, right? So something to be aware of as we prepare for August. And we get closer and closer to this extension level at 65.17 on the S&P 500. All right, so 6,500 level is coming in quickly. Honestly, we could get there this week, depending on how things go with the Fed and some of these other decisions. So we'll watch and see how we continue to progress. We come down to the 4, right, and we continue to track. Looks like we got to the D extension here on the 4. Okay, so that D extension has been achieved. So we'll look for a swing high at some point and a pullback to come. But we could, like I said, continue to push higher to 65.18 level first before we see that. Okay, so that's on the 4, looking for a fresh AB boundary. Down on our 1, also got to that D extension. Okay, long time coming to get there, but we got there. So look for a fresh AB boundary on the 1 hour as well, and then a retracement, right? So we're getting to high levels. Okay, Ben and I were talking yesterday, just talking about ensuring that we uh, take some profit off the table, right? Secure some of the gains, and then we plan or wait for right confirmation of that move back down, right? And then we make our plans from there. So continue to monitor your trades, monitor your levels, your take profit levels, right? And be sure that you're protecting your profit, not giving it all back to the market. Okay. So that's the S&P 500. All right. US 30. Still sitting at a high point as well, right? Right around that B boundary level, just been hovering sideways. Could we get one more pop to the upside and push us into that 118, 127 zone and set us up for that retracement back down? Right? That's what I'm curious about. As we move through this week, do we get that one last push into the zone? Okay, set us up for a nice 80-20 back down to the downside. We got a stochastic that's pushing into that overbought territory, right? So could we get that last catalyst there? Okay. Down to the 4. We're just shy of that 118, 127 is on here as well, right? So that last push to the upside will push us through that zone. Again, setting us up for a nice setup for a retracement back down to the downside. Okay. So watching this closely here as we get closer into that zone and as we get closer to the month of August. All right. Um, then to the 1. We're sitting in that 118, 127 zone currently. Right. So this push up could get us close to that D extension. May not get there though before we see that reversal. Right. So we'll watch that from that perspective as well. Okay. Questions on US 30? Oh, okay.
Nope.
Cool deal. And then the Russell. Here we're headed to the D extension, right? So one last push to the upside could get us into that D extension zone, right? Along with that weekly resistance level. Okay. And then we'll look for a reset and a move back down, right? And a pullback. Here, slightly different. We got a stochastic in the buy zone right now. So it'll be interesting to see how this continue, how these small cap stocks continue to move um, over the coming week, right? So we'll watch closely there on the daily time frame. On the 4, right, we got to that 382, the extension just above that weekly level at 2350. Um, so we could press up to that level before we see a retracement there. Okay. So that's on the 4, down on the 1. Same story, right? 382 push, so we're looking for that D extension to be achieved before we see a reversal, right? But all of these are ultimately pointing to another short-term push to the upside and then resets coming. Okay, so we'll continue to monitor our stock plays, our investment plays, right, and look for opportunities to add to those positions at low prices, and we'll look for the reset that comes. Okay. Questions on any of the indices? Nope. Okay. Cool deal. Let's let's run through some charts. Aussie CAD still hovering in the zone, right? We got Canadian dollar rate statement today, along with the Fed. We pushed back up to getting close to the top of that zone, and we started to make a move back down yesterday. Okay. Stochastic getting overbought, right? Not quite there yet, but we'll continue to monitor this in this zone, right? We have been in consolidation for quite some time. We could potentially stay there for a little longer, but we'll continue to monitor to see how price moves to see if we get a catalyst for this to move back down to the downside. Okay. Um, so still just keeping an eye here on this one, right? On the 4, high in the zone as well, 8-6 retracement. Do we finally get the catalyst to move this back down to the downside? We'll see. Okay. So that's on the 4, and then your 1 shows us our range, right? Top, bottom, back to the top, and now we're slowly moving back down, right? So we'll continue to monitor this from a fundamental perspective to see if we get the driver to really move this to the downside in favor of that Canadian dollar, right? So we'll watch that rate statement coming tomorrow. Okay, so that's a quick look at the Aussie CAD. Any questions here? No. Okay. Um, Aussie yen. Okay, I'm watching this one because we're still short on the yen. Okay, still looking for this to continue moving to the upside here. Likely take out that A. Um, but I'm keeping an eye on the Bank of Japan to see if there's any surprise changes or if we do get a change out of the prime minister, right? Does that cause a shift, right? Like I said, there are business owners that are really pressing the BOJ to raise rates, right? Because inflation is higher, 3.1%. But they have concerns when it comes to that the tariff deal that they just signed, right? And how that impacts the economy overall. So um so watching that closely to see what transpires out of Japan. Okay. So we'll continue to keep our eyes peeled here to see what type of action we get. But still looking forward to move to the upside. It could move a little slower though, depending on, like I said, what happens with the prime minister. Okay. So that's there. Down on the 4, we're headed to the D extension here, right? 99,013. And what I'm looking at is potentially once we get here, getting a nice reset, right? A nice reset and a move back down. So we'll continue to watch fundamentally what happens there. Okay. On the 1, we got a nice retracement here, 786 level, right? And we're trying to make our way back to the upside. Okay. Trying to make our way back to the upside. Getting some pullback happening now. Maybe we get crown type action here, and then that continuation to the extension level here at the 118 at 97,507. Okay. So that crown pattern looks like this. Took out the A, right? Do we get a deeper move down? And then that continuation to the upside. Okay. So we'll watch that there on this Aussie dollar. I mean Aussie yen. Okay. Sub fib play, but you had a deep retracement as we speak, right? So maybe this level holds and this turns into a shallow crown here with this double bottom. Right. So if that level continues to hold there, right, maybe we see that push, that takeoff happen with that rate statement this evening. Okay, so we'll watch that there, see what the Bank of Japan has to say tonight and tomorrow morning. Okay, so that's the Aussie yen. Um, Aussie dollar still hovering, right? Still hovering. We got a swing high to form there. We're pushing back down, but this trend line is still the same. Okay, still waiting on the catalyst to move it. Okay, so we'll see what the Fed has to say today. Let's see if we get that action to the downside to get us out of that 118, 127 zone and down for a deeper retracement. Or does that push it back to the upside, right? That's what we got to wait to see. Okay. So, uh, Fed statement will drive it. And so we'll be patient. We'll wait and we'll see. Down on the 4, we got to that D extension already. So we got a fresh AB boundary and we're in the up retracement zone already. Okay. We're in the up retracement zone already on the 4. That's our trend line right now, right? Uh, zoom this out because that was the 80-20 on the 4. Did not play out. So there we go. All right. So looking at this retracement here. Oops. What this did there. We're looking at this retracement here. Okay. So we'll watch and see how it plays. Okay. So that's on the 4th on the Aussie dollar. Down to R1. Moving down, right? So we'll watch and see as price gets down here into this deep retracement zone on the 1. Okay. Do we get things to flip for the dollar and that dollar to continue to fall off? Okay, so we'll watch and see there on that, right? Looking for low prices. I don't know that 80-20 on the daily. I don't know. I don't know. Got a ways to go for the de-extension, but I don't know that policy is in place to support the dollar very much. So, 64,880. Oh, so you got short on that? Great. Or you long? Which one are you?
No, I'm short. I
I mean,
I
I
was
get it.
early. I've been holding since June 19th. So
I mean, I get it. I
yeah.
get it. Right. We're sitting in the zone. I mean, it's a great entry on it, right? Um, and great job with your patience and allowing the trade to play out either way. Um, I just with the back and forth, I don't know if and maybe going into the fall, we do get that retracement in the stock market that could support the dollar from that perspective. Moving into safe havens, but um it's tough on the dollar right now. And the dollar hasn't completely moved in the opposite of the stock market this summer. So with all the back and forth that's happening. So I'm curious to see what that relationship looks like as we move into the fall to see if we get back to that more of an inverted relationship between the dollar and the stock market. Um, so I'm curious to see that and how that moves. So, but I understand. I mean, it's a good position, right? And it's just letting the trade play out. Your rules were met, so kudos to you. That's a celebration in itself. Is following the rules and letting the market do what it does. Um, so yeah, it'll be interesting to see how it moves.
And I hate to correlate this, and maybe this just me, but sometimes when I look for US strength, I look at it compared to the Swiss because
Sure.
um and that's the other reason why I didn't close it because I was about to close it last week. And I was like, nah, I'm outside. It ain't hit. It's still within the boundaries. I already know. I already chumped it up as a loss. So if it come, it'll be a bonus. Um, but it had potential, and I didn't have time to sit and wait on it. And I know when it does this at some point in time, we can get any kind of catalyst, and we'll get a nice one, and it hit me out at the 382 anyway.
Hmm. Yeah, no, I mean, Swiss being a safe haven, right? So it makes sense, right? Do we get safe haven flows, right? Movement out of your commodity currencies and your risk assets. So that makes sense. It definitely does. Um, so we'll see. We'll see. Kudos to you. Kudos to you. Right? Following the rules, and when you have concerns about it, asking yourself those if then statements, right? Or yes no questions, right? Is price still in my zone? Have the fundamentals changed? Right? Yes, no, yes, no, yes, no. And right now things are still the same, right? So we're still looking for that move back down to the downside, right? And this consolidation in the zone is not uncommon, right? It happens all the time. So kudos to you. Kudos to you. I love it. Right. So we'll see. We'll see if we get the catalyst to move this one to the downside, getting us back down into our sweet spot here. Any other thoughts on this Aussie dollar?
No,
Nope.
sir.
All right. Cool deal. Um, CAD yen. All right. Canadian dollar rate statement coming today. Got this nice push off the low here, right? And we've been moving to the upside on this on this CAD yen. Okay, so another one that I'm looking forward to continue moving to the upside when it comes to these yens, right? Do we get a pullback and then a continuation to the upside is my question on this, right? So catching in the buy zone, right? Setting us up for a move to the upside. So we'll see what the Bank of Canada has to say tomorrow as well. They could set us up for that move to the upside. All right, down on the 4, we got to that 382 level. So our matching extension is at 111. Ooh. It's so interesting to watch these pairs move, man. Um, some of the things you look at and say, I can't see price getting there, but it does, right? This fib sequence is a beautiful thing. So, all right, we'll look for that catalyst in that Canadian dollar to push us to 111, and then we'll see where we go from there. Okay. So that's on your 4. And then down on your 1, same story as the 4-hour. Right, you got to that 382. I'm looking for that continuation long. We may not get a deeper pullback here. So Bank of Canada has to say, but also the Bank of Japan. But we're above the cloud here. Still bullish ahead. We might stay long here. We may not get a deeper retracement on this. So just keep that in the back of your mind.
Can you go to the 15 if you get a chance?
Yes, ma'am. Fibs off the low or off the high?
I don't see us to casket, so because price is going up, I say from the low.
618 retracement there. Yeah, I'm trying to figure it out there. Went down into that buy zone. Well, so we'll see, right? Range bound a bit there. Maybe get another push to the downside, giving us a double bottom here at that 618 level, and then a push to the upside.
The only reason why I asked that because I was looking at oil, and oil is currently going down right now.
Yeah. It's an interesting back and forth that's happening there, right? Donald Trump changed his 50-day ceasefire, Russia-Ukraine ceasefire to 10 to 12 days. So he's giving Russia 10 to 12 days to sign a ceasefire agreement, or he's going to add quote unquote secondary sanctions on Russia. So that's putting a floor under the price right now. So it'll be interesting to see what happens in 10 to 12 days. But I don't see that war ending anytime soon. Um, I don't see that war ending anytime soon. So either we see the tariffs happen or we see that 10 to 12 days turn into 20 to 30 days, turn into 50 days. And then that cycle just continuing um, until something larger happens. So I don't see that changing. So that's putting a floor under price right now on on oil. We can go take a look at it. But it'll be interesting to see what the OPEC meetings come out with as well. But price is still holding at that 64.95 level, right? So casting in the buy zone here. We do have those production increases scheduled to still hit. So that could move us back down, right? And lower. But there are these geopolitical things that are um, uh, adding to the back and forth here, right? So right now, 64.95 is fair market value. We'll see if that changes anytime soon. So I still have positions on this one as well to the upside. I do think oil moves long at some point. So um, that's my overall bias on it. It's just a matter of when. All right. So we'll continue to see excuse me, how the market fares there. Um, Down on the 4, right? That's my daily fib there. I had to be manually drawn in, which we already have a 50% retracement on. Then I ran fibs off the low just to track price in these smaller waves here. So we have this is our active fib right now. We got a 382 push there, and we're just hovering sideways. So casting in the sell zone here, right? So I'm going to continue to test the 64.95 level and see if it's able to continue to hold up. Um, or if we get broken, actually it's a little bit lower, 63.95.
It's in between the 50 and the 200 where it just broke the
50 to 200.
50. Yeah.
Yeah. Um, we do got a support level there. So it's going to be interesting to see, right? Uh, where OPEC goes. And as we move into the fall, right, some of that demand could also slow from your travel season and things like that. Um, so we'll see if that floor continues to hold there, right, from the geopolitical perspective. Okay. And then down on your one. That's our fib on the one, right? Similar to that 4 hour. So we're sitting there in that zone, just waiting for some additional confirmation there, in either direction, be it up or down. That 4 hour stochastic was higher, right? So we got a mismatch there, which gives us that consolidation and back and forth between the stochastics on the different levels. So let me see. Let's see if I can get any other information on oil. um, let's see. Um, let's see. Market drivers, global growth fears, and wavering trade talks ahead of key tariff deadlines weigh on demand expectations. Um, Trade deal optimism with the U.S. and Europe, that 15% tariff. Brent saw a 2% jump there as that trade deal was inked, right? Renewed confidence in energy demand growth out of the Eurozone. um, let's see, OPEC Plus. Though OPEC Plus signaled intention to increase output, analysts note a strong ongoing demand of offsetting supply risks. Kuwait's oil minister emphasized supply compliance to maintain market balance. So that could be interesting as well. Some of those OPEC members going back and forth there on those supply increases. Um, on the U.S. side, U.S. production cutbacks. Energy firms in the U.S. reduced active rigs for the 12th time in 13 weeks, indicating producer caution amid price volatility. Rig counts continue to fall across key regions, including Permian and Eagle Ford basins. So OPEC increasing supply, you got U.S. production cutting back, right? So That's an interesting back and forth there. Um, um, Nothing there. Yeah, so we'll see, right? That's an interesting back and forth between OPEC and the U.S. production. And so we'll watch. We'll watch there and see which side prevails, OPEC plus or your geopolitical tension, right? So that's oil. That's oil. Um, Slide back and take a look at this Euro Aussie, right? Overall, still looking long, right? From a daily time frame perspective, move to the upside. We've been hovering as of late in this range here. Stochastic pushing back down into that buy zone. Okay. Um, Still bullish on the euro overall, right? We'll see how things pan out with the trade deal, but we get the catalyst to continue moving that to the upside. Okay. Down on it 4, right? We're coming back down into our deep retracement zone here in the sub-fib. I'm gonna pull this off. Right, this is our move to the upside here. Got sub-fibs running long. Okay, so we're hovering down in this 50% retracement area, right? 50% retracement area. Stochastic in the buy zone. See if we get that to turn back over and continue its track to the upside, right? I'm still sitting long here, a couple positions, right? And looking for that continuation to the upside. Okay, so we come down to the 1, right? And on the 1, we're back down in the 618 retracement area. Okay. All right, not quite a double bottom, but close to it, right? And see if we get to that matching extension on the 1 hour of 181, 821. Okay, so still looking long here over the long term, looking there, but got some work to do. So we'll see as we go into this risk off period potentially, right? If that gives us the catalyst for this to continue moving to the upside. Some weakness in the Aussie. Okay. And see if Eurozone, right? They gain some more stability, right? And continue that move to the upside. So that's what I'm looking at there on the Euro Aussie, back into the sweet spot, looking for that continuation to the continuation long. Holding a 177.031. Great work, Joy. 177.031. All right. You got in around, oh wow, around this range here, right? After that retracement on the last fib, right? And we're looking for that continuation to the upside. Good work. Good work. All right. Good patience. Right. Because from a long-term perspective, we got some sevens in the chat for Joy. Um, 617. Yep. Yep. Um, from a long-term perspective, right? That's what it is. Right. And that pullback there, right in this range here, right? Joy got an entry. I'm looking for that to continue moving along. Got quite a ways to go.
The only thing I have to talk myself out because I'm like, dang, I could have made that money 5 times if I was scalping it. And I ain't got the energy for that. But it's like, I don't want to take a great risk. So I'll just let one run. And I guess I was waiting for at least about 50 pips or 75 before a new entry. I don't know where I was going with that, but I don't know. This was hard. This one was real hard right here because I had 2 entries and one failed for the second entry, but I'm still holding on at the lowest.
Okay, I dig it. So if you're looking for a second entry on that, right? Track it here. Right? You're below your cloud. You see we're moving sideways, right? Price moving across the middle of the screen. We'll track it here, look for your trend line break, right? And maybe add your cloud confirmations into that. Because I wouldn't be surprised if we see this type of action. Let's hold up. If we see this type of action as we move into this little wedge here. Whoops, not like that, but right. And then make that move back to the upside. Okay. With that support level there. So, right, use your trend line as a guide and see when we get that breakout to the upside. So, potential option for you there. I definitely understand the back and forth that's happening. It's been a little bit difficult. But over the long term, we know we're more bullish on the euro, right? From a fundamental perspective. Okay. Um, and not so much on the Aussie. So overall, we know we're getting there, right? So the question then is, does this price hold here at 177, 146, right? If price holds there and we get a trend line break on the lower time frame, right? Entry opportunity for that second position to build that move to the upside, right? So that's a potential way you could play that and get that second entry with your additional confirmations on the lower time frame. Because we still got 1,000 pips to go. Still got 1,000 pips to go. So, and I see it coming at some point. So, it's just sitting tight and being patient with it. So that's where we are. That's where we are. We'll take a look at the euro dollar and then we'll wrap it up. Moving down. Okay, moving down. We got a 50% retracement. We're heading to the D extension where we got that dollar strength happening right now. We push back down. So watching this to see how deep we go, right? How deep does this push to the downside go? We got stochastic in the sell zone currently, right? So could see this continue to move to the downside, um, especially ahead of that rate statement. And then we'll see what happens after that rate statement and how the market takes that. And takes Jerome Powell's words and potential forward guidance. Okay, so looking at this level here, 114 as a potential settling point. We'll see how that fares, but somewhere in that range, that 114 range, we'll see how price moves from there. Okay, down on your 4, broke down from the cloud, and if you run a sub fib off the high here, right? No, that took that A out, so that didn't count. So no, so that one's moving down. Okay. So again, watching these lower levels here, 114 range, um, as a checkpoint, 50% retracement. So overall, we're still long. It's just pullbacks happening on the lower time frame. So Stochastic here is in the buy zone. Okay, so pull back and then maybe another move down to that 114 level before we get price to turn back over and move back long, right? We'll see what happens fundamentally. Okay, so as we get down to the 1 hour, pushing deeper in the zone. Okay, pushing deeper in the zone. Haven't got to the 786 level just yet, but 78686 range, maybe even, right? That's that day level on the higher time frames, maybe even the A boundary. Okay, get us back to previous resistance. Could that serve as support for a second time? So we'll watch that there as well. See if we get another push to the downside. In the meantime, okay. If you're looking at sub fibs, you do have sub fib here coming down. And you got an 80-20 there, right? So that could set us up for a pullback and then another move down, getting us to that 114 level. Okay. So watch for that, right? If you want to play the retracement, you can. Um, look out for that 80-20 there on that sub fib. Okay. Questions on the euro dollar? Nope.
No, sir.
Benny, anything before I wrap it up, bro?
No, man. Just like I said, waiting on this Fed move is gonna be huge. I really expect the market to be, a little bit tied up, a little bit sideways, not a whole lot going on, until then. But that's really it, man. It's really been a year of patience. The money's being made second half of the year. One thing that I noticed is that you know, the tariff situation is not having as big of an impact as it did when it first happened. I think the market is used to the normal shenanigans from the administration, right?
Mm-hmm.
The threats and then the backing off. The deal that happened with Europe, over the weekend, like we were talking yesterday, I expected it to, you know, I'm like, okay, well, that's a big partner, big deal done, but the market barely budged.
Barely
Like
moved.
it barely budged, So I think that's kind of, I think they've kind of moved on from that whole ordeal. So, our eyes are definitely on the Fed now. That's the next big, fundamental data point that we all need to be focused on. So that's where I'm at with it, man. And just know that, like you were going over a lot of the indices, right? They're getting pretty high, right? And when I see that on the charts, there's a possibility, hey, there may be a correction soon. So just continue to be patient and pick your spots in the market. There's been a lot of volatility with currencies this year, right? I know me and you were talking about that a couple days ago.
Yeah.
Stocks have been moving pretty good. The indices have been moving pretty good, but a lot of volatility with currencies. To me, it hasn't been, besides those longer term plays like we had against the dollar, like the pound dollar, things like that, euro dollar moving to the upside. I mean, but the dollar's been down since they took office, right, in January. But other than that, there's been in those yen plays, right? But other than that, there's been a lot of volatility with currencies this year. They haven't been my top plays this year at all. So we'll see what happens as we continue to go, towards the back half of the year. But it just is what it is, man. We have to be patient and trade accordingly, man. Great session.
Appreciate it, bro. And it is, right? That's what it is, right? It takes what it takes. It takes what it takes, and it is what it is, right? So we just continue to stick to our rules, continue to be patient, and allow the market to tell us what it's doing, and then we take advantage of it from there. Appreciate you, bro. All right, good people. We'll be back at it tomorrow morning, 6:30 a.m. Eastern Standard Time for the pre-New York session. And the 3 rate statements that we have coming tomorrow. Continue to be patient.